What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, guys. Welcome back to another live stream. Happy Friday to you. Hope you guys have some nice weekend plans ahead. And we'll see where these markets want to end up this week. It's to no surprise, I think, to most people that the market is just continuing its rip to the upside here. We are going to be closing here. Well, actually kind of an interesting week, right? Because you sort of had a run in place week from the S&P 500. We did stay above the prior all-time high pretty decisively. So bulls are still full in control when we take a look at the S&P 500. But meanwhile, you also have the Nasdaq, right? Look at the Nasdaq. The Nasdaq looks incredibly strong, closing above last week and closing again above. Nasdaq actually outperforming sharply here this week. Dow Jones, not so much, kind of the lagger of the group here, actually kind of lower from last week's close. And the Russell 2000, again, kind of running in place, similar to the S&P 500. Momentum here definitely seems to be favoring technology, but it is not evenly distributed. Let me explain what I mean by that. Semiconductors, guys, are the winner, just absolute winner, chicken dinner. Look at semiconductor stocks. This is going to be Micron, NVIDIA, Taiwan Semi, AMD. You have many companies in the semiconductors stock world that is just absolutely going crazy. James T in the chat points out that you have Intel. Look at Intel today. It's up 25% here in the pre-market with 27 minutes to go until the market opens. Reason I'm showing you this is because, well, that's dragging the Nasdaq higher. So if you're trading Nas, watching the futures, watching NQ, watching Nas 100, whatever you trade, this thing is flying high and it is being led higher by semiconductors. So we also have the other big chunk of technology stocks, which is going to be software companies. Software companies continue to sort of lag behind. Take a look at software stocks over the last few months and you'll see what I'm saying. Since pretty much October of last year, software has had one of the most horribly devastating crashes that it has had in its history. Software stocks at one point down 37% in just a few months, right? This thing has absolutely gotten hammered to the downside. People are worried that software companies, the moats around their businesses are getting destroyed, and that you have all sorts of problems for some of the software type business models, given that AI is perceived to be able to do a lot of these things very easily. I personally think that software has some really quality stocks out there in the meantime, and I've been playing that side of things on my secondary YouTube channel and inside of our Discord where I talk more about individual stocks. I'm watching things like Salesforce and ServiceNow and Adobe and Microsoft, etc. I'm not going to spend too much time on that here on this live stream, as this channel is a little bit more focused on, macro, in the sense that we're looking at currencies, commodities, indices at the higher level. So we'll keep that brief, but I did want to point that out, as you do have, again, some interesting underneath the surface rotation when it comes to the indices. And if you trade indices, I do think even if you trade Russell, the Dow Jones, if you trade NAS, S&P, etc., I think it is good to know what's going on under the hood. So you should build a watch list of ETFs that track what's happening underneath the index, right? So you could do what I've done here. These are all of the different sector ETFs. You could look at discretionary stocks or software, as we discussed, industrials, technology stocks. I think getting to know your sectors underneath the index level is a very, very important thing to do if you are going to be trading at the index level. Which pair are we trading? We'll maybe get to some currencies here later on. We're going to keep making our way through everything here. Just a brief touch on the dollar. Dollar index continues to look really sleepy. Currencies right now to me I don't really see anything too attractive. If I look at the US dollar specifically, we don't have a lot of conviction on the US dollar, although the British pound, someone brought this up in the chat today. I believe it was Max B. Max, if you're here, shout out to you. This is something that was pointed out inside of our Discord this morning. And that is the economic surprise index showing a very sharp rise. I know it's kind of faint here, so bear with me. Very sharp rise in the British pound recently in regards to its economic data. Look at this. British pound, which I don't know what color comes to mind when you guys think of the British pound, but for me, I'm weird about colors. Like I can see colors with different things. Like the British pound for me is a green color. Anyways, actually it's more specifically, it is kind of a darker green than this. But anyways, the British pound getting a really strong reading. So too with the Australian dollar, the yen. These are things getting stronger green lights here on Edgefinder's economic data here. What's getting a weaker reading? The Swiss franc, the Chinese yuan, South African rand, the euro. These things are kind of our weaker currencies. So for my currency traders in the room, this is kind of the distribution that I am looking at. So I'd be more interested in going long things like the British pound, the Australian dollar, the Japanese yen. And I'd be more willing to short things like the Kiwi dollar, the Swiss franc, Chinese yuan. So, this is, I reference this page often because when it comes to currencies, I like to trade the ones that are showing economic upbeat scores, like we're seeing good data come out of the regions, the economies there. And I like to short things that are showing weakness. Like I like to follow the macro momentum as well as the price momentum. So this is interesting. Can we find, maybe we do actually have some, I'm not going to trade the dollar because dollar looks really kind of mixed to me, but British pound, can we do a little study on GBP pairs today? See if there's any Friday trading action on the British pound. See if we can find something. And we do have a couple to check out. We have euro pound getting a bearish rating. I do want to inspect that one. I looked at it yesterday. I didn't love the price action. Pound Kiwi, pound Swiss, and pound dollar. But let's go through this, right? So I'll show you exactly how, this is how Edgefinder 101 works. By the way, we do have a free chat. I'm going to take this screen off in just a second, or I'm going to change the overlay in just a second. But if you want to scan the QR code and join our Discord, the link is in the live, or it's in the QR code. Just scan that on your phone if you're watching from a desktop or something. And join us in our Discord. There is a free chat now available. Please be aware of scammers. We are banning them as quick as we can, but pros and cons. We opened up a free chat, which is great. We're meeting a lot of people. A lot of people are bringing their trading ideas. We're building the community. It's fantastic. Unfortunately, scammers are also trying to break their way into the Discord. They already were. They're everywhere, unfortunately. But yeah, we do have a free chat now. Long story short, scan the QR code, join us in Discord. We'd love to have you in there, even if you don't pay to become a member, which does unlock you more access to stuff that I think you should get. But for free, for starters, join the Discord. Okay, so continuing, let's look at some of these pound pairs just to see. The one that I would maybe be most interested in is pound Swiss. And look at this. So I'm gonna just Like this is a trade setup for me. This is a trade setup for me if I'm looking at pound Swiss franc here, support, resistance. This would be a trade for me, almost certainly. You have moving averages starting to come into play here. If you were to see this type of move, right? A breakout, a retest of this area, to me, that's worth a stab on the long side. Again, not telling you what to do with your account. As always, not financial advice. I got it on my screen all the time for good reason. There's people out there, unfortunately, from my perspective, I mean, I have it all in the disclaimers down below, across the text, on my screen. As always, I am just sharing my thoughts and opinions. We deliberately make sure that people know that because there's people out there who, unfortunately, you know, they really shouldn't be trading and they do anyways, and they make really terrible decisions and then they get angry and want to blame other people. But at the end of the day, I'm not telling anybody what to do with their account. I'm not a financial advisor. With that said, I do like pound Swiss franc. This type of move would be interesting to me, right? Looking for upside, looking for pullbacks. It's a trade that I would be interested in. Other one maybe be pound Kiwi. Let's look at that one. Pound NZD. Yeah, so this one had a nice engulfing candlestick pattern yesterday. Tagged the 38.2% retracement. Just clean up our level just a bit there. So I do like this one as well. Though personally, I'd probably be more interested if it did come double back and test this support area. That could be something to the upside. So there's some currency trading for you today. I know I don't have anything pressing like hit the button right now per se for my setups, but I do still have a couple ideas out there that let's just look at pound dollar as well. Pound dollar, very clean setup here, but I'm a little hesitant. I do like the pound dollar specifically if I was to trade dollar short side, but I don't love dollar short side. And I'll show you why. It's not that I love dollar. Well, actually, hold up. Let me take a second here. Do I like dollar long side? Let's look. Fundamentals +2. Non-farm payroll was strong. Unemployment rate was better than expected. ADP better than expected. Weekly jobless claims were soft. JOLTS job opening just barely soft. Producer price index was soft for the dollar. 2-year yield is on the rise. That's bullish dollar. Consumer confidence, decently strong. Retail sales, decently strong. Manufacturing PMIs, decently strong. Services PMIs slightly missed, and GDP growth missed. Okay. Mixed to just very slightly positive to the dollar. By the way, Sluggy and all of you guys who help manage the Discord, I greatly appreciate your help on that. It's like the most frustrating thing in the world. Discord really, I wish they would take things up a notch in the ways of being able to help moderate like automatically Discord servers. Like I wish you could make it so that you could ban certain keywords from being said in the chat. Like Discord doesn't allow you to fully remove hyperlinks natively. Like I think you have to use a mod. So I'm going to probably have to like get a bot or something in there to reduce links being shared. You hate to have to do all that stuff because people just are, scammers, but we'll do it because I do like the idea of having a free chat for people. But yeah. Anyways, here's another thing. COT data for the dollar has been pretty persistently bullish for a while. Like if we take a look at our COT velocity, does this tell us anything about dollar? I'm going to say that it probably does. Well, we can just highlight dollar really quick. Dollar accumulation on the weekly. Dollar institutions, what are they doing with dollar on the monthly accumulating? What about the quarterly? So see what we just did there? Let me highlight what we're looking at. So if you're a fan of tracking what institutions are doing through the commitment of traders, we just added a new chart. It's called the COT velocity tab. It's pretty cool. I mean, I'm really excited about this new tool because it's so simple and it honestly like makes me, it is like frustratingly how simple, in comparison to some of the work that we did to build the COT report stuff, COT data history, like this chart took us meaningfully less time. And yet I did a poll on the audience maybe like a week ago or 2 weeks ago. And people were like 70% more in favor of using the COT velocity page than our other tabs. So it's a little humbling because it's like, dang, we worked so much harder on these pages. However, I'm at the end of the day, what is our mission at A1 Trading? Our mission is to build tools that help traders better spot opportunities in markets. That is what we do. We build tools to help people do that. And if this is the preferred way to look at it, hey, it solves the goal. Goal is to help traders with tools. Anyways, dollar accumulation on the weekly basis, monthly basis, and quarterly basis through the commitment of traders report. So I look at this and I say, okay, yeah, so big money's moving into the dollar, and they have been for a while. So I don't hate the idea of looking for dollar longs, but what holds me back, what's going to keep me from saying I'm long dollar right now, is I'd like to see a little bit more proof in the technicals. So we did get a nice pullback to this 98 level. Buyers seem to be stepping in. This is a big spot here. And if we're going to put in a longer term higher low type thing, you could be looking for this type of move. This to me would be a very solid move higher for the dollar index if you break that 100 level again. But maybe more so in the meantime here, maybe there's some individual currencies that I like against the dollar more than others. I would just like to see like a break through these highs, pull back into this area, just a little bit of a higher low sequence would be really nice. And would give me a little bit more technical momentum favoring the upside on dollar. By the way, this chart and all of our charts within the Edge Finder are currently super discounted right now. We're doing a 40% off discount for our 4-year anniversary sale since launching this product to the public. We have had a lot of people take advantage of the discount. So if you are interested in also not missing our 4-year anniversary sale, which is the biggest discount that we'll do this year, here's how you can take advantage of it. Down below my camera here, you can scan the QR code if you want to explore the product in its entirety, take a look at all the different features that we have built for our traders using our data and tools. If you don't have access and would like to get access, we'll also drop a link here in the live stream chat to where you can connect and speak directly to a member of our support staff about getting set up with a copy of Edge Finder. Again, we have people all over the world using our tools. In no way is it a magic money system, but it's rather like, it's sort of like a retail friendly terminal where you have all of this data in one spot. So take advantage, like I said, if you want to take advantage of the 40% off discount, click this link that's just been dropped in the live stream chat to speak directly to our sales team. If you do that during the live stream here, they can set you up with a payment plan, extra discounts for countries outside of the US, 45% off, all that sort of stuff. So just don't miss it. Chat with someone from our team. They can get you set up with the discount while it is available. We had a donation in the chat. Thank you so much. King of Kings again with the donation. Hey, I appreciate your donating again to our coffee fund here at the office, keeping us fueled here to keep making this content and sharing stuff with you guys. So thank you very much. You inspired me to start my long-term investment portfolio and buying some fractional shares of VOO on my Fidelity account when the market opens. Hey, King of Kings, thank you very much again for the $5 donation. I think that being multi-strategy, I have to be careful with this because some people are, very set on, I need to figure out my one strategy and just do that. And I think that's great. I think it's great to build a strategy and play it over and over and over. But I do also think that personally, not financial advice, having a couple different strategies is a fantastic way to approach the markets. And if one of those strategies is to build long-term stuff, I think that's fantastic. I too have a longer-term thematic position strategy. Now, this is something that I do as a US trader. In the US, if I take a trade, let's say I go long oil and I make a profit and I close it
4 days later, 5 days later, and I do this all the time, right? I mean, sometimes I also lose, but let's say I take a profit. In the next year's taxes, I have to pay taxes, short-term capital gains tax. Now, if you hold something in the US for 1 year plus 1 day, it gets taxed as long-term capital gains tax. So there is a significant difference. Now, of course, it depends on your tax bracket, etc. But for me, there's a significant difference if I can hold something for a year and a day and close it out. So I actually have a trading strategy or approach where I actually try to, I don't always, I'll cut them earlier and tax loss harvest if necessary. But I have a strategy in which I try to hold for at least 1 year on something that I thematically think will move higher over the longer term. Individual stocks, ETFs, I'll show you one right now. IJR, I will hold on to this stock or this ETF for at least 1 year. Now, this isn't everything that I do in my portfolio. A lot of what I do is shorter term in nature. In fact, the majority of what I do in my trading account is short term in nature, but I also have long-term strategies in there, or a long-term strategy in there, because it is more tax efficient. Again, I'm not a tax advisor, so do your own research on this and speak to someone who knows more than I do. But having a long-term strategy can be nice because the tax advantage, especially if you're in the US. I can't tell you what it's like in other countries. Ali Photography Film says, can you help me? I want to buy an Ola Prime account. What do you think I should go with? Or is Funded Pips better? So I don't know much about Funded Pips. I would encourage you to explore our website for this. So if you head over to a1trading.com and go a1trading.com/prop firms, and I'm going to just drop this link in the chat for anybody who wants it. So I'll tell you, these are all sponsors. If you use our links, you will be supporting our business. There is commissions, affiliates, etc., that get passed on to A1 Trading here. So with that disclaimer out of the way, explore this page, because these prop firms, like I'm a content creator, this stream is a content creation spot. We don't run prop firms. We don't know everything about prop firms. But what we do know is some of the crowd favorite prop firms have worked with us to set up really great discounts for viewers of our content. So please do your due diligence, take some time, but head over to this page if you're interested in getting a prop firm account. We always have our best sponsored offers on this page. So like you can trade with DNA Funded, explore them, see if they're right for you, see if you like that firm. And if you do, A1T20 for 20% off. Maven, right? They have a 5% off code with us. A lot of people love Maven because they offer some really low cost rates. But again, do your homework, because these are sponsors of mine, but I'm telling you, go do your research on each one of these. Use our codes because, again, you'll be supporting the channel and I appreciate it, but also because why not take advantage of discounts that are out there? But find which one works for you, because different people have different strategies that might work better. I can't give you personalized advice on which one to choose, because your strategy, I don't know what your strategy is. I don't know what your time frames are. I don't know. Like, do your own research, put yourself in the driver's seat. If you're going to trade with funded accounts, be your own research, like do research on each one of these, see if they are right for you. Because I'm telling you, if you're a prop firm trader or if you're trading on a brokerage account, one thing that people totally miss or undervalue is shopping and reshopping for the best place for you to be trading with, right? There is an incredible difference that it can make in your trading journey, choosing the right prop firm, the right brokerage, etc., for you and for your style and for your strategy, and taking advantage of discounts out there. Like I'm telling you, I know obviously we're always talking about where to get in, where to get out, what markets look hot, what markets don't look hot, but don't undervalue the importance of selecting the right firm to trade with, selecting the right brokerage to trade with. So again, full transparency, these are our sponsors, but please do your own research, find out for more on that website that just got dropped in the live stream chat.
Because again, most people undervalue that. People, they'll just jump in and trade with any brokerage or any prop firm, but really you should be doing some research on it, because you can make a substantial difference for the better or worse, choosing the right or wrong firm or broker. What do you think about gold today? Yeah, let's take a look at gold. I've been very bored with gold here recently, to be candid with you. Gold is stuck in a range. We've still got this range that we've been in back and forth. I do also think that I lean just slightly more positive on the US dollar. So if I compare that to gold's getting a +1 score, so very, very neutral score here. We do have the latest commitment of traders data coming out tonight, so it will be interesting to see if they continue to add more to their gold longs or if they start to reverse or sell gold. We'll watch that COT report tonight. That data will be interesting for gold moves. So stay tuned on that. But I'm very neutral on gold from a price action perspective. It looks very choppy, looks very back and forth. And I don't have, like, you can get down there and trade the 15-minute if you want, but for me, that's just not for me. I'm looking for a bigger, more clear macro driven trend on the 4-hour and the daily. And it's just, what we prioritize on these, streams where I'm talking about my approach to markets. I tend to be looking for a macro trend that makes sense. Unlike the 4-hour, you have this sort of downward trend forming, but I think if you're a bear, you probably want to see this thing break underneath 46.60 with some conviction. And if you're a bull, you probably want to see a break back through those highs, or on a more local, shorter term basis, a break of at least this downward structure we're seeing. Oil is down here a little bit, retesting this breakout spot. Let's see if this holds as support here today. Geopolitics are back and forth, as they have been for the last several weeks. We're trying to figure out if negotiations are going to happen or not with the US and Iran. It seems like Iran is shutting that down. We also had a lot of, and again, this is another reason why people are like, how the heck are indices moving higher? This is the reason. Look at semiconductors. Semiconductors are the market at this point. And semiconductors, those are the chip, the data center build outs, all the AI trade is kind of emblematic of this trade, right? The semiconductors trade. This is why indices can continue to move higher, even though there's uncertainty in the Middle East, is because the excitement around AI and the efficiencies that it's going to bring to corporations. And I am bullish on semiconductors, but I think it's important that we acknowledge semiconductors are on one of their, I think this is actually the greatest trend in semiconductor history. I saw that on Instagram. Someone can fact check us on it, but I read that it was like the first time, I think we had 17 days of upside move in semiconductors in a row. I believe it is the longest trend in history for semiconductors without a red day. Unbelievable, right? Just dominant upward trend here for semis. And that's what's dragging the Nasdaq to new all-time highs, is the excitement around the AI trade. Yes, there's still geopolitical uncertainty, etc. But what's bigger than Strait of Hormuz stuff, which could get resolved, maybe it doesn't, maybe it does. And I do think that if the conflict is escalated again, then yes, it will get the attention of the stock market. But in the here and now, the market thinks the war is not going to be forever. They're going to find a way to end it. And in the meantime, we just have a boom going on in AI spending, right? Tesla just reiterated they're going to spend more money. Semiconductor stocks are just on fire. Memory companies like Micron. Look at Micron. This company is like, this is where if you can pick stocks and you pick the right stocks, unbelievable upside. Granted, I was actually having a conversation with a friend this morning who him and I have looked at stocks together for years. Pros and cons of stocks. It's like a 90-10 rule. And what I mean by that is like 90% of the time you try and pick stocks, they do okay. They do subpar. They maybe just keep up with the market or they move lower, right? 10% of the time you catch a monster, like a monster runner. Like if you bought Micron, your returns in Micron compared to the S&P 500, that's a 562% return just since, wait for it, last year. In 1 year, 562%. So that's the upside with stocks. Of course, many times you can also get caught with like buying a UNH and seeing, 40% of your stock go down, right? So understand, stocks are not easy. Nothing is easy in markets, but that's the pro and con of single stock selection, right? Stock market just opened up. We'll keep an eye on it here. We'll see how things play out today. If we're going to kind of gap and fall, I think you just keep your eye on the semiconductor world, see what's going on there. That is the story, at least in this market right now. And it is the leader. So we'll see where that goes next. Guys, we're going to be thrown over the show here in just a second to Mr. James Lane. FX James going to be taking over for a little bit here. Before I throw it over, just remember, guys, the 40% off sale coming to a close pretty soon. We're doing our 4-year anniversary sale on the Edgefinder and Stockbox for that matter. If you are interested in stocks, explore Stockbox on our website as well. Both of them are 40% off. You can send us a direct message right now if you're interested in learning more about Stockbox. I know we've actually had a lot of people interested in Stockbox recently, which is exciting for us. I know I talk more about Edgefinder on this channel, Stockbox on my other channel, where we focus more on stocks and options. But explore both because the sale is not lasting much longer. So click this link or scan the QR code below my camera to speak to a member of our team and get that set up. Up next, Forex James after this quick break. Stay tuned. If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hey, how's everyone doing? Happy Friday, ladies and gentlemen. Hope everyone's well. Hope you've all had a very profitable week. So we've seen some pullbacks in the market today, nothing too drastic. Aussie New Zealand is having a little bit of just a bit of a moment. I'm not concerned. So what we had on the H4 is a little bit of an overbought condition here on the RSI. We came into this triple top. Excuse me. So technically speaking, a little bit of a drop off from here is completely expected. As long as we don't start breaking this 200 moving average on the H1, I'm completely fine staying in the position. Either way, to be honest, it's been an absolutely fantastic trade. So even if this scaling it doesn't work out, we can still book some pretty healthy profits on the trade overall. New Zealand US dollar. Now, yesterday I was saying that I was going to cut it after the stream. However, as soon as we ended the stream, or I ended my segment on the stream, maybe half an hour after, we started to see some really positive developments. So this market just continued to run to the downside, broke below the H1 200 moving average. We've now seen the H1 moving averages form bearish, which is good. We're also not seeing much of a follow through from the H4 200 moving average that was used as a bit of a dynamic support here. So I'm very happy to stay in this trade for now. We have also seen a little bit of a sort of break and retest behavior around this, what was previously support here. So as you can see, broke below, retested this 200 moving, used the 200 moving average as support, retested this level, and it looks like we're now ready to continue lower. So I still really like this trade actually. It has also popped back on the Edgefinder. Now, yesterday, New Zealand US dollar fell off. I'm fairly sure it went down to a -4, which pushed it into negative territory. And because at the time, it was kind of just not doing much, we're still in a little bit of drawdown, maybe a slight bit of profit. I can't remember. So I was considering cutting it, but, you know, it worked out. Well, so far it's starting to work out. Euro pound. Now I really like this one. It's a pending order. I'm not in this trade yet, unfortunately. I was almost tagged in about an hour ago on this this top candle here, but it didn't quite get there. So the pending order is still there. I'm still looking for a little bit of a higher retracement into this 50% level, retest these levels, these lows over here. That would give us, again, that break, retest into the fib zone, and hopefully a continuation lower. We've also now had the moving averages here also form a bearish trend. So I really like Euro Pound. It's also the most bearish reading on the Edge Finder. I actually made a video about Euro Pound as well on my channel, so feel free to go and check that out if you want a bit more of an in-depth look at it. Swiss yen's not working out so far. I did post on my Instagram story that I took a scaling position. So I added to the trade right here on this low. I got taken out with a trailing stop about here. So made about $100 on this trade, but overall it looks like it's not working out too well at the moment. And I'm fairly sure the yen pairs are actually getting bearish readings. So we've got CAD yen, Swiss yen, New Zealand yen, all bearish. So yeah, I'm not very optimistic about this trade anymore, but I'll leave it to run because it's not broken yet. Once it starts breaking this low, then I'll probably take 50% of the position off and let the other 50% run. If we start seeing positive developments from there, I can just put the 50% back in. But if it runs to full stop loss, at least then I'll take a slightly less of a hit than the full risk that I did have. Finally is the Australian dollar Swiss, which is not doing anything. A little bit of a gap down or move down on the market close last night, but overall very flat. Anyway, let's see what you guys are saying. Sluggy, hello. Good to see you. Ian, my friend Ian. How you doing, Ian? Cycling Club. I love coming to these streams. You know, it's a highlight of my day. I like talking to you guys. It's always a nice warm welcome. Europound shorts, yes, got it last week. Cycling Club, are you the guy that's in my free Discord? I'm not sure if you are. Someone caught fantastic shorts in Europound. It was either here or here. I can't remember, but someone caught it, and it was fantastic. It was beautiful. So if that is you, congratulations. Max, hello, good to see you. Leon, hello. Okay, so what we talked about, Swiss yen jumping into negative score is a beautiful confirmation of my Swiss yen sell. You know what's funny, Max? We seem to very often have opposite positions, which, as I always say, is actually a very good thing. It's always good to have people with different ideas. But yeah, if it's working out for you, congratulations. I'm using the current, we spoke about this yesterday and I think the day before as well. But very commonly, you'll hear the Edge Finder isn't a timing tool. Don't use it as a way to time entries, which is absolutely correct. You shouldn't. However, in a very specific situation, like what I'm about to explain, it can be. Or at least for the way I trade, it can be. So New Zealand yen, as we've already just said, New Zealand yen, Swiss yen, CAD yen, all, excuse me, sorry, all getting bearish readings. Now, I'm not really wanting to be a seller. I don't really, I've got no, I'm very much in the camp that the yen is still weak. It's still a funding currency. I'm very happy to just buy these assets. But in the way that I'm using the Edge Finder as a timing tool in this case is avoiding being about, obviously I'm in Swiss yen now, but that was before the Edge Finder was really bearish. So at the moment, I'm letting the bearish readings play out. If the market wants to come down, totally cool. I'll stay out. But once it flips back to neutral or maybe bullish, then I can start looking to be a buyer on the dip. So that's my plan at the moment with New Zealand yen. Anyway, I'm not sure about the other yen pairs. I need to do a bit more research into them, but I think that's quite cool. You can follow the Edge Finder's readings or you can use it in different ways. It's very versatile. Code elite for a discount, by the way. Quick plug. You're not in the free Discord, but my entry price is at, okay, let's have a quick look at your entry. So you said 0.87089. Okay, yeah. Yeah, really nice entry, actually. I mean, I'm a bit jealous, but it is what it is. as long as you're in money, it's all good. Yeah, I mean, I was very tempted to slightly break my rules this morning because what we had was a consistent rejection of this 38.2 fib level. I very rarely ever use this level. However, we were rejecting it multiple times and I was starting to get a little bit of FOMO. I was like, you know what? Let's unselect that. Let's disappear from the chart for a bit. So that's what I did. Almost tagged in. Didn't quite happen, but it is what it is. It's fine. I'm happy to leave this pending order pretty much over the weekend and reassess it on Monday. Maybe I can get a market execution on Monday. Oh, sorry, maybe I'll have to go for market execution on Monday, but we'll see. No pressure. Swiss is dropping now. Nice hedge on Aussie Swiss. Yeah, that's also a good point, Max. Short Euro New Zealand entered yesterday at market close. Let's have a look at Euro New Zealand. Do we have a reading for this one? Wait, did you say you were long or short? Oh, short. Okay. So no edge finder reading for me. Let's go monthly. Let's just start our top down. Monthly actually is a little bit concerning if you're buying. Sellers, maybe you could be looking at a bit of a mean reversion here. Slight resistance level, slight resistance level through here. A little bit of a rejection, but also this monthly is quite deviated from the 200 monthly moving average. Again, not a huge deal. Monthly timeframes, big timeframes, but it is something to keep in mind. Weekly is bullish. However, lower highs here, so take that what you will. Daily bounce off 200 moving average. I'm sorry, Sluggy. Personally, I don't see anything here. However, maybe I'm sure there's reasons maybe that you're going for that I don't see. I'm just taking a second look here. I suppose we do have some areas over on this left side that could potentially see potentially see a correction. So we can see rejection of this 200 H4 moving average. There might be ideas of trading into these levels down here. Simo, however that is pronounced. Hello. Late to the party, not too late. Shorted UJ yesterday. Very nice, Sluggy. Well done. James, I'm jealous of your Aussie New Zealand entries. It seems like none of your entries experienced negative drawdown. They did. I don't want to sit here and say they were perfect by no means. I mean, this one here had actually like 1 or 2 days of just drawdown. This one had a couple of hours. This one also had a couple of hours of drawdown. I mean, nothing bad per se, but they hypothetically in a perfect world, they could have been better. However, it does go to show how the fib can be used very nicely. Take the low to the high, just following the trend, and the edge finder pull back into the fib. Granted, obviously this one didn't hold up as well as it could have done, but the entry was still based on the fib. Second move here, pull back to fib, entered right here on the 50% rejection, moved to the upside, and then the same thing here again that reached into this fib level and previous structure on the left. So it's actually, it's kind of a perfect example of my technical strategy in play. I've also locked in a slight bit more profit, locked in 0.5 on this initial position. This position stop has also been trailed up to the same level, and the third scaling, or the third position here, has still got full risk on it. So yeah, we'll see if we can get a move towards the 1.25. That's my full target. That's basically where I'm looking to exit. I've had a few different ideas for take profits, but that just seems like a really nice solid round number to get out of the position, and it would be a fantastic return on ROI. Oh, well, sorry, it'd be fantastic ROI. Didn't need to say return on that. Anyway, Max is short Aussie New Zealand and in profit now. We'll see what happens. To be honest, I wouldn't mind potentially. I'm not going to, by the way, I want to clarify, but I wouldn't actually mind putting a little bit more size on at this point, just because, as I said earlier, the H4 looked a little bit extended. We've created this triple top, overbought RSI. So a little bit of a small pullback or correction on lower timeframes as it was expected. We're starting to see a little bit of a pullback to the upside here. The RSI and the H1's a little bit oversold at this point. We're still in a bullish trend on the H1 as well. So microstructure wise, it's still looking very supportive for longs, in my opinion. And cannot forget Edge Finder with a score of 13. I completely covered that. There you go. Score of 13 on the Edge Finder. Fantastic stuff. Can't get any better, in my opinion. Short Euro New Zealand. Sorry, not short Euro dollar. Oh, interesting. We were looking at this yesterday. Maybe I should have taken that. I am not really very confident in euro dollar. I think shorts make a little bit more sense because if I had to pick a direction on the dollar, I would say I lean more bullish than bearish. But I don't think I'm swaying enough to be involved with euro dollar either way. We also we don't have an edge finder reading for euro dollar either. But what we can do is have a look at the Forex scorecard and just see what is going on. Oh, it's automatically there. Yeah, I mean it's -1, so there is nothing going on. So we've got economic growth is bearish, jobs market is bearish, inflation is bullish, and then if we also apply, the sort of war premium that the dollar is holding up a little bit with, yeah, just nothing there for me, unfortunately. Maybe shorts if I had to go with one direction, but I really don't like it. So those targets are bingo. Oh, and you're a New Zealand sluggy. Very good. Tony, hello, it's good to see you. You don't trust the yen anymore? Neither do I. I don't trade the yen anymore, actually, unless it's taken by one of my other traders. The amount of times I've been burnt on it's actually a little bit embarrassing, the amount of times I've been burnt trading the yen. All I had to do was buy, and somehow, still, I think to be perfectly transparent with you, I think I'm net negative on the yen out of my whole career, probably. First of all, because I took a pretty significant loss in, was it 2024 on dollar yen? But yeah, I just can never seem to get it right. It's just something that I just can never really trade well. Whereas like things like euro dollar, I can do quite accurately, but yeah, it's just one of those things. Trying to be patient, ready for the UJ rally before going short. Yeah, I don't. I'm not sure I would want to short dollar yen, but as I already said, probably wouldn't work out in my opinion. I know, but can't get any better for me is exactly the point. NZD flipping hawkish might bring interest rate. Interest in. Yes, but relative strength is still in favor of the Aussie dollar, in my opinion. So, as we've already discussed multiple times, I am still absolutely, I'm not going to say 100%, I'd say 99.9% positive that we're going to have a mean reversion on Aussie New Zealand at some point. That will come, I think, when we have a real shift in sentiment, when there is some reason, obviously, fundamentally speaking, that the Australian dollar is no longer more attractive than the New Zealand dollar. At that point, we're going to, again, very likely, in my opinion, we're going to see a reversion back to sort of the mean of this range. I don't think this is a case of, we've broken out the range and now we're just going to continue, a completely new trend after 14 years of sideways. I think we've had all the stars align for the Australian dollar, and it's obviously been the catalyst to break out of this range. But currencies, especially, the major currencies, liquid markets like Aussie, New Zealand, they don't just trend forever. They do pull back and they do mean revert and they do follow behaviors. So we'll see. Again, I'm not trying to time it, and I don't think that's happening right now, but eventually I wouldn't be surprised at all. Is it the same risk to short GBP USD and Euro USD? Well, it depends what you mean by the same risk. I would say actually the GBP, in my opinion, is a little bit stronger than the euro right now. So if you're wanting to short one of them, I would go towards short euro dollar over pound dollar. However, they are still quite correlated. So if euro dollar really does get dragged down, pound dollar will also catch a bit of that drag as well. So yeah, I mean, there's not a huge difference, to be perfectly honest with you, but obviously they are driven by separate things in terms of their own economies, but they're still correlated. With an account of 1K, I take 2 trades. Wait, hold on. With an account of 1K, I take 2 trades per asset and risk 2% for the start of the year. And now I'm up around $850 because of you, sir, James, and A1. Trading grid, that is fantastic to hear. So that is, what, an 85% gain, if my maths is correct. That's fantastic. Just make sure you're not doing silly things, because what can happen when you have an absolutely fantastic run, it can be because there was one regime going on. So whether you are just exploiting the Australian dollar strength or whatever it may be, when that condition changes, just make sure you're still able to trade profitably. Because that's one thing that can happen. Again, is traders can get caught in that regime, and they're not able, or they're not educated enough to know when that regime is no longer there, so they continue to trade and they end up giving back either all of the gains or a large portion of it. I'm not saying that is you. This is more of a broad message for other traders. Any idea on gold longs? No. To put it simply, absolutely not. I just don't think gold is in an environment. I don't think gold's in an environment really for it to be benefiting from anything. Nick put a video out actually yesterday. I think it was about buying copper, and he broke down gold really well, and basically just said that, to paraphrase, most central banks are leaning more on holds or hawkish. Gold doesn't do well in that environment, point blank. And what we're seeing over here is yields are starting to get a bit of upside again. So obviously we had the initial upside. Actually, where was it? It wasn't all the way back there, was it? Yes, it was actually. I'm thinking out loud here. So yeah, yields caught obviously upside on the Iran situation. So we had obviously oil up, inflation expectations up, central banks going on hold or hikes. So yeah, yields up, gold down. We had a little bit of a relaxation here, but we are starting to see them pick up slightly. And we're also seeing the same thing here with the 2-year yields or the short end yields. So overall, gold just doesn't have that much to do. And then we take a look at the asset scorecard, and I just don't think there's anything here either. Let's just double check before I start talking. Yeah, so it's getting a score of 1. So again, it's neutral categorically. Jobs market's bearish, inflation is neutral, economic growth is bearish. So, what can you do? Gold has nothing there. And then you look at the price action, and, what is there to do here? There's really just not much going on. With JPY, time is difficult, but eventually something will happen. Yeah, of course. AUDCHF seems good on longs. It does. That is why I'm in. So yeah, we're in the Aussie Swiss longs, which is quite nice. But we're kind of just stuck in a bit of sideways price action at the minute. I don't understand why traders are even looking at FX when, hold on, chat's going a bit quick there. I don't understand why traders are even looking at FX when clearly the money was in metals, then moved to indices, then crude, then bonds coming up. Well, yeah, I mean, I kind of agree, but I also kind of disagree. I think there's money to be made in pretty much all markets, or all asset classes at least. It doesn't really matter too much for retail where the money is. It's more a case of if there's a market trend and the edge finder's there, we can trade it. We don't need to overcomplicate it by having to pivot into assets that maybe people don't trade. So for example, I don't trade bonds. I'm not going to go and start trading bonds. I can, I've got profitable FX positions open. I can stick with those. Different strokes for different folks. Exactly. That's very well said. I use carry trade and edge finder score. A strong bias and fundamental and technical. Very nice trading grid. That's, yeah, beautiful stuff. Yeah, make sure you drop me a subscribe on YouTube, by the way. I am trying my best to get to 5,000 subscribers. So it's coming to the end of my segment. We do have the one and only Alan Perez coming to take over in a couple of minutes. So if there's any final chart requests, let me know. If not, we can continue just having a little wander through. Australian dollar individually, the currency itself is getting a bullish reading, which is nice. The US dollar has also actually just got a bullish reading. I didn't notice that earlier. New Zealand dollar, actually, this is really nice for my New Zealand dollar short position. So US dollar is bullish, New Zealand dollar is bearish, and we're also getting obviously the New Zealand US dollar pair getting a bearish reading too. What else do we have? Pound New Zealand, I'm not overly interested in, I don't think. Let's just double check. I think we looked at this yesterday. I can't remember if we found anything. I mean, I would assume not, if I can't remember. Let's see what's going on in the daily. Yeah, okay. Actually, this looked okay. But I think yesterday what we were looking at was this H4 trend. So I wasn't really in favor of the fact that we bounced off the daily 200 moving average, which is quite nice. But at the time, we were coming into this moving average cluster or whatever you want to call it. I didn't want to be a buyer there. However, we've broken above now. So this is technically now reestablished a bullish trend. The daily looks healthy. So maybe Pound New Zealand isn't a bad idea. Yeah, the downside, I'm remembering it now, and I'm looking at it. The downside is the R&R. The risk is okay, but I think really you'd be looking towards a 1-to-1 or a 1-to-1.5 max. Obviously, I'm assuming you'd be targeting these highs, which is what I would do. But yeah, I think it might be worth a bit of a stab, but it's definitely not my favorite, purely based on technicals. I think fundamentally, sure, I really like the edge finder reading, but yeah, it's looking a little bit ropey on the technical side. Pound is getting a bullish reading as well. I've actually not been on my desk this morning, by the way, which is why I'm doing so much sort of thinking out loud. So that goes back actually to the pound dollar, euro dollar conversation we're having. So yes, I think if you were looking to be involved, I think pound dollar probably would be worth staying away, because we have the pound getting a bullish reading of 9, but we also have the US dollar getting a bullish reading. So based on just this, pound dollar should, in theory, have more of an upside drag. Obviously, the pound is slightly more bullish, but I wouldn't want to trade two bullish currencies. You know, the idea is you go for strong versus weak, not strong versus strong. So yeah, I would scrap pound dollar personally. However, I've also just noticed now I'm looking, pound dollar is getting a bullish reading, but what I said still stands in my opinion. Thoughts on Aussie CAD? No edge finder reading, so automatically I'm going to go in with a neutral bias. Yeah, so we're coming into this level of previous resistance, current support. H4 is bullish, daily's bullish. Technically speaking, I wouldn't mind being a buyer. Yeah, based on pretty much just the trends and previous structure here. Let's just see. Is this a fib level? It's not a fib level, unfortunately. So yeah, scrap the fib on this one. I think, yeah, maybe just buying at support here is kind of all I've got for you. But again, that's only based on trend and a level of structure. I don't really have the fundamentals to back that up on the edge finder. So as I said, default is neutral. Master one kick 10,000 times better than mastering 10,000 kicks at once, Bruce Lee. It's like running 10 different businesses at the same time, but I get what you're saying. Yeah, I suppose, yeah, I mean, there is, it kind of depends though. I mean, you could apply that all down to one individual market. So, you know, you get people only trade euro dollar or people only trade Nasdaq. Anyway, that's not the point. So let's just do a quick checkup on Bitcoin. That's becoming a bit of a habit on these segments, just doing a little review on what's going on. So it's tricky because I'm not a Bitcoin trader. I don't want to sit here and really give you too much on like the drivers. However, I am, as I said, still a little bit cautious that although it looks like we've bottomed here off this 200 moving average, the RSI was oversold. And these levels could, in theory, act more as a sort of break and retest rather than it just being a case of Bitcoin's now going back to all-time highs. Again, I could be completely wrong. I'm not involved in Bitcoin. Don't take this as gospel. But again, it's just a concern. I'm not saying that is going to happen. However, having said that, Bitcoin is bullish, or was, yes. So Bitcoin's getting a bullish reading of 5. So it might be something to take into consideration. If we can break above these levels, whether it be this one, look for the retest and continuation, maybe look to enter on a retest. Same thing on the second level. Maybe a retest, break and retest type entry would be maybe the more sensible, not financial advice. What else is there? There's not really anything else. So let's just do a final check euro pound. I am a little bit salty on this position just because I have a feeling I've missed it. I mean, there's still time, obviously, but yeah, I'm just a little bit annoyed that my entry was missed by a couple of pips. I mean, that's trading. That's how it goes, but yeah, it's never good when that happens. So take profit wise, I don't have a hard take profit. I think obviously sort of maximum I would allow this to run would be, well, yeah. Saying that if we just fell off a cliff down to 0, obviously I'd hold it. But realistically speaking, this would kind of be the max take profit or extended take profit, if you will, if everything went well and it continued to rally down. However, shorter term, if we're looking more again, on more of a realistic side. These lows make quite a nice take profit. It would not be a fantastic R&R. I think that might be a 1 to 1.5 or a 1 to 2 based on my stop loss. However, I think I wouldn't mind targeting sort of this area, which would be around the 0.844. And again, if we continue beyond that, fine, I'll hold it down to my extended take profit. But that's not really the biggest point right now. First of all, I actually need to get into the trade. Euro pound could do a top wick for next week candle. That is all there. That's a good point, Sluggy. That could be the case. Best case scenario, yeah. Yeah, that would be good. So yeah, New Zealand dollar just needs a bit of a kick. I really need to see this just do something. I mean, yesterday was great, but yeah, from here, I'd love to see it just continue down. That would confirm that break and retest idea. If we start coming back up, it would be a little bit of a red flag for me on a technical side. I wouldn't close the position, but it would put me on guard, might just reduce a little bit of size off. And Aussie New Zealand, again, I'm quite happy to continue holding this. I really like the developments. I'm not worried about the pullback that we just had. I think that will just be absorbed pretty quickly. So next week, I would be looking for a new high to get printed. So something like this, where we break above these previous highs, retest here, and then I wouldn't scale in again. But if I was going to, that would also count as another scale in position for me. Generally, I like to keep scalings around 3, unless there is something absolutely fantastic. But I'm quite content with where I'm at here. Anyway, ladies and gentlemen, I'm going to head off. We have, again, the one and only Alan Perez coming to take over the show. Guys, have a fantastic weekend. Thank you for having me. And I'll see you all later. Stay safe and don't get margin called.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, all of my friends. Hope you guys are having a great day or afternoon wherever you guys are. It is Friday, so last stream of the week here. What a fast week it went. As always, guys, feel free to drop any chart markups that you guys want me to go over in the chat, and I will do my best to go over them. I saw some risk appetite here this morning. Equities are higher today. S&P, Nasdaq. I think Nasdaq had a lot to do with IBM doing really well. No, I'm wrong. Okay. But yeah, tech is doing fantastic. All of them, really. It seems like there was some back and forth yesterday when it comes to escalations. I think there was the president said something about some ships getting ready to use some force. But then I think someone resigned. Someone resigned yesterday from Iran's side, and as of this morning here, someone is going to travel to these countries to go ahead and communicate. So hopefully that is peace on the horizon. I would hope so. Markets definitely taking it that way. With the stock markets are up, dollars down. And so what does that mean for my positioning? Well, it happened to me again. And what I mean is Euro pound, one that I really wanted to go ahead and short here. And I missed it by a hair as far as my alert and entry goes. So a little bit frustrating. So we'll see if I can get a pullback somewhere into this level where I can take a stab at it. But it seems like I have missed the train. I don't really want to short right here anymore, but we'll see. That's kind of frustrating. It was one of my preferred things on the Edge Finder, but we do have a lot of other things there as well. So you do have, for one, Euro pound is getting a bearish reading that's a little bit stronger than yesterday. So yesterday was -7, and now it is -11, which I like to see. You're seeing some yen pairs getting strong. So the yen getting strong against the Swiss, the Kiwi, Canadian dollar. You see Euro Aussie getting weak as well. So I might have to add that onto my list because it seems like the Aussie basket as a whole is doing really well. So let me write down Euro Aussie. I'll get to that in a little bit. But yeah, it seems like the Australian dollar basket is doing quite well. The Australian dollar isolated on its own is getting a bullish reading of 6. And then you have Aussie Kiwi, Aussie Swiss. I believe Aussie CAD is somewhere up here. Yep, Aussie CAD. So I do like that. The only one that's not getting a bullish reading is Aussie dollar. But I am open to building a position on these pairs here. So I do have some kind of let me put on my 20-day moving average. I do have an entry preference as far as these pairs go for the Aussie basket here. Let me make sure I have an alert on all of these moving averages. And then that way, if it gets triggered, then I can get entered here. So let's add an alert here. I'm going to put it at the value, same as chart. When it crosses on the, yep. It's going to trigger it once per minute. We're going to do these for all of these pairs. Aussie Swiss, same thing, though it hasn't really given me any pullback, but I'm hopeful. So what I'm going to do is do an alert for all of these as well. Give me a sec here. What's perfect? It's the same. And then this one as well, Aussie Kiwi, which is like my preferred one, honestly. It's been really, really strong lately. Strong trend. Really enjoy it. So I do like the Aussie basket as a whole. It seems like it's been doing quite well. If I really never sold if I never took profits, this thing would have been a clear winner, and I would have been trailing my stops here. But I took profits when we got that initial big wave of escalations in the Middle East, because I thought the Aussie basket as a whole was going to weaken because it's a risk currency. But it's really recovered since then, right? We had this low here that we put in, and it's really continued on that upward trend. I'm going to put an alert here for Aussie dollar too as well. So Aussie basket, I'm trying to go long there. Euro pound, trying to go short. However, it seems like I did miss that entry point. As far as dollar direction goes, I'm a little bit neutral on the dollar. We are kind of moving into these moving averages here. So the 200-day and the 50-day moving average, we're kind of like in this cluster. And I think there's a chance that this thing continues lower, honestly. Depending on the risk sentiment, the developments in the Middle East, it seems like we're heading that direction. The only thing that's a little bit frustrating for me is that stock market is looking the way it looks. Straight monster move up. It's crazy, no pullbacks. And so that just means that, in my opinion, that it's going to be more sensitive the higher we go without anything meaningful pullback. So yeah. Let me look at the chat here. Happy Friday, Sluggy, my good friend. Simo, how you guys doing? Leon, man, it's good to see you guys. Sluggy, what am I watching? I'm watching the Aussie basket, Euro pound, but it seems like I missed that Euro pound. Tony says we are in no war, no peace moment. Yeah, man, that's the thing. That's what makes it tricky. What do you think going long Euro Kiwi next week? I don't know. I actually don't like the Euro right now, to be honest with you. They had the weakest PMIs since COVID, and services PMIs were the weakest since 2024. So I don't like that for the Euro. So I honestly wouldn't go long Euro Kiwi. And then the Kiwi dollar as well is actually quite weak there as well, Tony. So it's getting a bullish reading though. But from my understanding, earlier this week, the Kiwi dollar basket was getting a pretty bearish reading, unless something changed. But I don't believe something changed overnight. Anything Kiwi related, let's go to the economic heat maps here. And for those that don't know, if you're new to the channel here, the tools that we use on this stream is called the Edge Finder. It gives you a great view. It automatically tracks the fundamental data and it scores it against every single asset class. That way you don't have to do that by hand. And it gives you a bullish and bearish score there. It kind of makes life easy for you. So when it comes to Kiwi dollar, the only recent data point that we saw was 4 days ago, which was inflation. And it came in harder than expected. So that would be supported for the Kiwi dollar. But other than that, everything else seems to be kind of the same there. So I guess that took that bearish reading off of the Kiwi dollar. I don't know. I kind of don't like the Euro, so I would stay away from this one. I think there's better readings out there. Like Euro pound, I really like a lot. I just missed the entry there, which is very frustrating. Max said the resignation might be false. Oh, really? Okay. Iran's, can't pronounce that. Rumors of whoever that guy is. Resignation aim at disturbing public opinion. Ah, okay. Okay, cool. All right, so it seems like we got some missed signals in there in the chat here. Someone wants to go long Euro Kiwi, one is short Euro Kiwi. Cool. Alan, treatment for an early stage prostate tumor can move markets now? What? Treatment for an early stage prostate tumor can move markets now? Simo, I'm confused, man. You gotta give some context for that one. That's a little. I don't know. I don't know how to digest that one. I think I'm healthy though. I don't know. I don't know if that's for me or for someone else. Um, Aussie CAD looks great to the upside. Yeah, Aussie CAD does look great, man. It looks great. It seems like we're getting some kind of a pullback. I don't know if this level right here, so I'm gonna mark this as just for illustrative purposes. If I go to the 4-hour time frame here, I'm going to reset this view. They seem to have been really strong resistance, right? All of this right here. So we rejected it many times. So once, twice, 3 times, 4 times. We traded into this and then it acted like a support here. So ideally, if we can get somewhere within this range here, I think this can turn into some very strong support and Aussie CAD to the upside. So I do have right now this 20-day moving average as support here. But I'm willing to, if it gets even deeper somewhere within here, I'm looking to actually go ahead and buy that as well. But I love that pair as well too, Sluggy. So to me, CAD strength is Fugazi. So they had some elevated inflation yesterday. I think it was PPIs that came in hot for them. Let me fact check that real quick here. So we'll go to the Canadian dollar economic heat map. By the way, guys, this tool is 40% off, 45% off. So definitely go ahead and snag yourself a copy of that. PPI, yeah, so came in way hotter than expected here at 7.8% versus 6.5%. So that is very high there. And then also to retail sales this morning here came in weaker than expected. So that's definitely not good for the Canadian dollar outlook there. And so I would expect dollar CAD higher. But for us, particularly talking about Aussie CAD, the Australian economy is doing quite well. They have elevated inflation that they're looking to fight, and the growth doesn't seem to be that much of a problem versus the Canadian dollar that seems to be the problem there. So I do like this pair a lot, Sluggy. We're on the same page there. Hopefully, I can get a decent pullback and participate in that one. Okay. Alan, you have a red zone drawn on your euro pound chart. Do you ever use those zones to take trades immediately? Cycling Club, no, I don't. The colored zones, I've been implementing them here on the stream more lately just to make it easier on the eyes. I know some people are watching on a computer or a TV or a phone, and so I try to make it easier on the eyes because usually I have like these gray ones here, which I preferably like here, which makes it super clean. They kind of like they're not as invasive to the eyes or to the chart. But I've been using the color ones here just to make it easy on the eyes there. But to answer your question, do I take trades immediately on those zones? No, I don't. I don't. In my personal opinion, I think everyone here is really, really good at technical analysis. But technical levels are not like concrete set in stone where things will react to them. So sometimes you have a zone and it just, price just flies right through it, doesn't respect it, doesn't do what it usually does. When it hits a strong level of support or resistance. So they're just for illustrative purposes and trying to find good levels to buy, to sell. But one thing I do like is that Forex particularly reacts really good to your horizontal levels, in my personal opinion. Hey, Bashy, man, good to see you, my friend. Hope you're having a great day, and hope you had a great live stream as well for your channel. Am I still short Kiwi dollar? No, man, I got stopped out of Kiwi dollar. However, right now it seems to be back within like near my entry point, but that's okay. I think that regardless, nonetheless, I think Kiwi dollar does have some upside if you do have some de-escalation talks. We saw the Aussie basket, euro dollar, pound dollar for sure, Kiwi dollar. They all arose on the fact of some de-escalation early in the week. And so I think if we get another wave of that, which I think is possible because essentially we have Max corrected me earlier, but Max said that the resignation from the one gentleman over there in Iran was fake. But then we do have some other foreign ministers from Iran traveling to some countries there. So don't know how that'll play out. But essentially what I'm thinking is if you get some de-escalation, I think Kiwi dollar will get some support there. So kind of my thought process on that one. Lex. Yes. Hey, Lex. I remember. Can you touch on your video yesterday on how it will affect the market and Edgefinder scoring? So I made a video yesterday, short form content about Kevin Warsh. Essentially just bringing out what the regime change could look like, some things that he's mentioned before. And I have Marco here joining me as well. So I would love to have his insights into this as well. Marco, how are you, my friend?
Hello. Well, how are you? I'm doing pretty well.
Good, man. Good. I was gonna answer this question here, and I know you had some takes on this as well, so maybe you can add into this. But Lex asked about the Kevin Warsh new regime that he comes in.
Mm-hmm.
A couple of
Mm-hmm.
things that he wanted to do. One of the things was, and I pulled this up here for this morning as well, Lex. One thing that he wanted to do, or that he didn't commit to, rather, was less FOMC meetings as far as like the press conferences go. So Jerome Powell does one after every single FOMC meeting, and Kevin Warsh didn't commit to doing that. So, in my opinion, Lex, if you have less meetings or less of those live press conferences, and within those live press conferences, you get a little bit of hints, you get some clues as to how the Fed's thinking, how people stand from the Fed chair. So if you get less of those, I think that's less clarity. And when the press conferences do actually happen, then I think there's more volatility around those events. He wanted to do some other things, one of them being core PCE. He thinks it's a little bit outdated, and he wants to look more at a trimmed mean when he looks at inflation. So essentially stripping all of the outliers, not just food and energy. And so essentially, if we were to be, if Kevin Warsh right now was the Fed chair and he was approaching inflation under that framework, then inflation right now would be at 2.3% versus PCE showing 3% right now, which convenient given that the president wants to cut rates, and it seems like we're making progress on that front. And Bank of America, this article here that I watched earlier was saying that it essentially says, be careful what you wish for, and I'll be very quick with this. But essentially, back in when was it? It was another time where the trimmed mean approach for inflation was a lot lower than what the headline like PCE or CPI was, but it was the wrong call. In fact, it was actually very, very highly elevated inflation, and so it actually would have worked out really, really bad. So there's some pros and cons, but Kevin Warsh wants to essentially stop hand-holding traders and essentially the dot plot, right, where you're front running what the Fed could do with rates. They want to take more of a like a reactive approach, like a predictive approach, if you will. But Marco, any takes there on Kevin Warsh and how that could affect the market and stuff like that?
Yeah, so you used to have 8 meetings per year, and 4 of those had future projections in them. So the dot plot was actually a big market mover, and I know a couple of traders. For example, the top guy on the Darwinex platform, he used to trade, maybe he still trades, the dot plot release. Essentially, if the dot plot was very much different than the last dot plot, then there was a big move, there was a big repricing happening in the markets. And now if the dot plot is completely removed, well, that changes the whole game. We still may get some future projections, but the actual then interest rate decision could be more sort of market moving than any forecast that we get. So it's going to be a different market environment for us traders. One thing that was kind of I didn't like with Powell was he was always dancing somewhere in the middle. He never wanted to fully commit to any sort of an opinion, which was, I guess, fine, because that's how professionals do it. But I would like someone with a bit more resolve to sort of take one side, to say, okay, now it's time for cuts. That's the game plan. We're looking to cut, and that's how we're going to proceed. I think that would be a bit easier for us traders than just listening to Powell saying, oh, risks to inflation are elevated, but also risks to the GDP are high as well. So we're kind of we're in the wait and see approach. That's the hardest thing to trade, in my opinion. So hopefully there's something different. Hopefully he is a bit different than Powell, but I think he's a great pick, and a very safe pick nevertheless. He's definitely not a Trump puppet, and he definitely knows what he's doing. So, and it's not just one person; it's a committee. When does he step in? Do you know maybe the rough date?
I think it's that part right there is a little bit tricky, Marco. Supposed to be, if I'm not mistaken, sometime in May. But one of the senators were saying that they were essentially going to refrain from making any movements until the thing with Powell is taken away.
Okay.
So I think that's kind of the thing. Let me say one thing real quick here. There's a guy here in the chat saying, stop scamming people, stop yapping, and this and this and that. Kajan, I hope, seems like someone got one on you, but I would really suggest here, if we can flip to my screen, don't get scammed. A1trading.com/scammers. I hope you didn't get taken advantage of, but it seems like you did. Verify everything. It's unfortunate that there's scammers out there, but please look at this. And we put our own time and everything into this, so we're not scamming, I promise you. But to go back to Kevin Warsh and the approach and the less meeting minutes, or less press conferences, and less dot plots and all that good stuff. And to answer Lex's point, because Lex had a follow-up question, what does that change for the edge finder? And I think that kind of puts us at a point of advantage, because I don't know about you, Marco, but I don't really rely on the dot plot really to make a trade decision. It helps me. It gives me like, okay, cool, like this is what markets are expecting. But this tool right here helps you with that, with understanding where central banks can go. Is something bullish or bearish for a current asset? So thankfully, this tool right here, despite a Fed change and a regime change, all that good stuff, I don't think it would really affect me that much. How about you, Marco?
I would say the same. And also I would say, I think this is just a troll in the comments, but if you did get scammed, definitely go ahead and look at the website that Alan showed you, because in the Discord there is very, very many fake accounts. So be super careful and always trust the handles that you have on the actual A1 website. Edge Finder, first line of defense against any sort of regime change or Fed change. So that's what I'm trusting the most. I did pay attention to the dot plot in terms of like an extra confluence. So
Sure.
if I'm building a position, I may use it as an extra confluence. I did try to develop a strategy that purely trades around, let's say 4 times per year, the release of the dot plot. And you can actually make some decent profits, but I found it was a bit too inconsistent. And out of those 4 times per year, when you get the dot plot, maybe 2 or 3 times you get the exact dot plot that the market was thinking about. So you would need a big deviation from the expectation to get an actual move, to get a big move in the markets and to be able to profit. But it's gonna be interesting if they do remove the dot plot. What I'm personally waiting for, I'm just waiting for them to start cutting. I mean, they are on a path to cut. They're supposed to cut. And if you look at, for example, if you go to the Fed interest rate, you can go to Trading Economics, for example, you go to the 10-year, you will notice this chart kind of coincides with the volatility on the DXY. So if I open up the DXY right here, and if you zoom out, it's going to look pretty similar to the chart that I just showed you. Definitely in 2022, when the Fed was on a path to hike rates and the dollar massively appreciated. So this period right now, this period of flat price action and really low volatility, coincides with pretty much no movement in the interest rate. We had some cuts, yes, but then we had US and Iran hit. So we need another cycle. The Fed is the only one supposedly that is priced in for cuts. I think that is the case. I think every other central bank is looking to hike, which means long term I'm bearish on the dollar. And once that actual cycle starts, I could be looking to sell the dollar against any sort of a currency that is strong at that moment. Could it be the Aussie, so buying AU? Could it be buying EU? Could it be selling USD CAD? We're going to have to wait and see. But waiting for a new cycle.
I agree, Marco. I think the U.S. is in a great spot to cut, whereas some other central banks like Australia, elevated inflation, pre-existing even before the war. So they have to address that problem. The U.S. has been holding up quite well. When we look at Europe or Eurozone, they're already at 2%. So they're ideally, they just have to hold steady and hopefully this passes through. Other central banks as well. The only one that's looking to hike, which is besides Australia, is Japan. So you're definitely correct on that one, which is the Fed is the one that's looking to actively cut. And so I think once you do get that green light, you do see some dollar pressure there. And I'm trying to position myself for that. Like maybe that's going to be the next thing, right? It seems like the war may come to an end soon. I would hope so. So I mean, maybe that kind of helps the narrative, and hopefully that expedites that theme that we're talking about, that next cycle. But for now, Marco, anything new that you're looking at? I was expressing to the audience here earlier. Aussie basket looks quite well for me. Euro pound. I'm kind of pissed at that one, man. Looking at the 1 hour chart, it got super close to my alert, to my entry, and then I didn't get it. So, and it's moving that lower. And the bearish reading for Euro pound is now -11. So I think I missed that one. Ideally, if I can get another push up there, I can enter, but I'm not going to chase price right now. Besides that, though, I'm pretty much kind of open to any new ideas or just sticking with what I have at the moment.
For me, I'm still thinking the same. So being flat and focusing on stocks. Only currency pair that I'm watching is Aussie NZD because it's in a pretty nice uptrend, but I don't want to pull the trigger just yet. So Aussie NZD still bullish reading on the edge finder, close to the 20 MA, so the entry area is nice, but again, it's not really moving anywhere. And DXY, not really moving. JXY, especially flat. Of course, UJ, I'm looking at that one just because of the possible intervention. Most of my focus is still on the equities. But again, even in the equities, last few days, this whole week, we had nothing. Nasdaq pushing higher, that is correct. So if you're trading the Nas, but the S&P flat from Monday, we filled the gap. That's about it. Bitcoin pushing up as well, which is nice, but I need a pullback. So looks like it's going to be another flat week. We still have one more until the end of April, but what I'm waiting for is just concerning the sort of the Forex market. I'm waiting for all of these central bank meetings. If you go to the next week, you have the Bank of Japan, you have the Bank of Canada, you have the Fed, you have the Bank of England, you have the ECB. So you have 5 central banks. Hopefully they start taking some sort of a stance. For now, as far as I remember, it was mostly wait and see. Yes, we're concerned about inflation. Yes, we're concerned about US and Iran, but we are in the wait and see period. If they start taking a specific stance and saying, okay, the sort of the Middle East conflict has cleared up a little bit, the ceasefire is here, so we are improving at least a bit. Oil prices do not seem to be going crazy, and the market seems to have moved on from oil. That could start some sort of a cycle. And you just need one central bank to start. You don't even need like all 5 of them to give you a specific path. You just need maybe the, I don't know, Bank of England to say we're going to cut. Because let's say right now they're positioned for hikes, but they could come in and they could say, you know what, our economy is doing pretty bad. Numbers are pretty low. The growth is pretty bad. The unemployment is rising. We need to cut. So we're going to cut. Boom, you get a repricing. You get a start of a trend. And that's how we can make money.
Marco, that would be a big one for the UK, the pound. This whole move up here was like on 3 hikes, right? They were pricing in 3 hikes. Big move. And we're still somewhat elevated up there. If they were to come out and say, listen, we're hurting and we need to cut instead or whatever, that would be a big thing. So next week, I hope that we have some volatility in for Forex there. We do have, like you said, all those central banks. I wanted to get a pulse check here on the chat. I'm pretty flat here. Marco's same way. With equities the way they are right now, I'm curious, for one, is anyone like chasing this price here? Or the second question I would have for the chat, and I know some of you guys are probably working or driving or whatever, so if you have the time to do so, but what trades are you in right now? Like, what tickers are you guys actively in right now? I just want to understand, how you guys are. I know yesterday a lot of you guys were flat, but I want to see if anything changes or anything.
I mean, it's Friday.
It's Friday too.
Possibly people are going to be winding down their positions. I wouldn't open new positions before the weekend, to be honest. But yeah, I'm interested to see it as well. So in the comment section, if you guys just want to type in the sort of the assets you're looking at. And during that time, I will just go ahead and announce the giveaway. So if you want to participate in the DNA funded giveaway, just fill out this jot form and you will get entered into it. So I'm going to post the link to the form right now, and go to the form, fill it out. You'll get entered into a wheel of names. It is a 10K one phase account. So what do we have as far as trades go?
We have some Euro bears. So Sluggy is short Euro Kiwi and Euro Pound. Max is selling the Swiss basket, which is wise. I think SMB said something yesterday. I think about it getting too strong, which very, very wise call there, Max. Pound CAD long, Elvis is one's long 8 HSI. Young East here. I'm not in a dang thing. Excuse my French. Hey man, I'll be frustrated too, Young East. I'll let this one slide here. Jose, Aussie Swiss, long. Oh man, I'm jealous, Jose. And Gymnast is dollar Swiss. I don't know which direction, but okay. So it seems like people are playing Forex. People are playing Forex. I was expecting more indexes and maybe some metals action, because I know that's very popular. But yeah, so it seems like people are playing. Oh, there we go. There's an index right there. Aussie index. Okay, cool.
Aussie 200. Let me see that one. The US 200. Okay, so very
good play. Yeah.
It's actually the bullish cycle, or sort of the bullish uptrend we had from in the last few days and weeks is not that big. Interesting to see. I think DAX hasn't recovered either. Yep, DAX stuck in a range as well. Pretty much the only indices worth doing on the long side, in my opinion, are US stuff and the Nikkei. That's about it. Yeah, from what I'm seeing, UK 100.
Yeah, a lot of people are requesting that. Before I go ahead and excuse myself, guys, I will say this once more here. The sale for the Edge Finder will be ending soon. So we do have the anniversary sale at the moment, and it is coming to an end soon. So definitely get yourself a copy of that Edge Finder. It is the biggest discount of the year. So I definitely recommend it. And also too, join the Telegram channel if you are not already in there. I know a lot of our chat here is involved in it, but for anyone that's not, it is completely free to join. I highly recommend it. We do chart markups. We do quizzes every day to keep you guys sharp. You have some discounts there, from prop firms, from us, from everywhere. So definitely get yourself a copy of the Edge Finder and join the Telegram channel. Marco, any last thing we can go over before I head out?
I think we covered everything. Do you have something on your mind?
No, not really. Just a little bit frustrated here with Euro Pound here, but we'll see if we get the pullback. But yeah,
hopefully we do get a pullback. Yeah. So you're looking to play just sort of a quick sell into that level of resistance. Nice.
A quick stab. Yeah. All right, man. Take it easy, man. Have a great weekend.
Yep, sure. Let's hope we get some central bank activity next week.
For sure. Alrighty.
Yep. See you. Goodbye. I'm going to post the form for the giveaway one more time. So if you want to participate in the DNA funded giveaway, let me copy this and paste. In the comment section, go to the jot form, fill it out, and you will get entered into the giveaway. If you do want to get funded, definitely check out DNA Funded. We have a 25% discount code for you, which is A1 Live. So A1 Live gets you 25% off any DNA funded challenge. I've had a great experience so far. This is my personal 25K two-phase funded account. I'm down $700, but it's part of the game. I'm just going to keep on trucking. I have a sell on gold against euro. So I'm in a bit of a drawdown, part of the game. I've had, again, a great experience. There's a big broker behind this company. They're using Trade Locker. And one very cool thing about DNA is when you hit the profit target, the account automatically closes and you automatically pass. So if you're running multiple positions, you don't need to manually search the profit target. See, so it automatically closes your winning positions and you pass. So I've never seen a prop firm do that. That's pretty cool. A1 Live, 25% off. Take a look. As far as my watch list goes, I don't have much. It's been a quiet week. So if you have been trading for a while, you would sort of develop a sense or a feeling when you should be active and when you should stay out. In March, I had a really, really strong feeling. Markets are moving. I need to participate. I need to put on positions. It paid off. I had some pretty nice trades in March. April, especially second half of April, I've had a feeling of things are flat and things are just not moving anywhere. Makes more sense to be more patient. And from the stuff I'm reading online, from the newsletters of veteran traders, makes sense to be flat. So I don't have a lot of things to talk about, but that is just how the markets work. We're not going to have a lot of activity. We're not going to have a lot of trends every day. And what the trouble with most retail traders is they make a lot of profits in the trending periods, and then they go back to break even during, let's say, the month of April. That's something I can see online as well. So a lot of people made some good profits when the initial shock from the war happened, initial volatility, and now they're trying to re-execute those positions. They're trying to trade oil, or maybe the people that were trading, so they're trying to trade oil, or maybe people that were trading gold in 2025 are still trying to trade gold and getting chopped up in the range. So there's a time to buy, there's a time to sell, and there's a time to go fishing. I think that's a quote from Jesse Livermore. Comments. Long pound dollar, but got stopped out for a profit. Going back in next week. Okay, how about drawdown, trailing drawdown? Marco, you need lower low for higher highs. Staying put can't hurt, protect capital. Essentially, like if you caught the recent post from Trader Nick in the Discord, he's mostly flat. What he is doing is he's selling covered calls. So he's basically betting on a bunch of stocks, US stocks, that the price won't go below a specific level, that the price will stay above a specific level. As long as it stays above a specific level, he collects an income. You could make the case for, I don't know, Google, let's say. So with options, what you can do is you can I think it's called a covered call. You can say, okay, in the next 30 days, I'm betting that the price of Google stays above 318. And if it does stay above, you get, depending on the capital, you get, let's say, $500, $600 in income. But if it goes to that level, you take assignment and you hold those shares. So it's kind of a win-win scenario because you then become a long-term investor in Google, and Google is a pretty good company. So price can stay flat, but as long as it stays above 318, you make an income. And that's the sort of strategy that works the best in the current market conditions. But Nick also mentioned he's struggling to find opportunities in FX. He's struggling to find opportunities in metals. I think he bought copper. I think he is in a long position on copper. And also stocks. You don't want to be chasing these highs. Unless you're a super scalper, unless you trade on a really low time frame, you take quick setups, quick positions, I don't know what you would be doing here, especially this week. I mean, from Monday, let's see. Yeah, from Monday, is this tradable? You tell me. Maybe on the NAS. On the NAS, definitely it is. On the NAS, we had a better sustained uptrend, but on the S&P, not really. Okay. Leon, hello. Euro dollar, trend and advice. Problem with Forex is momentum is not there, except Aussie, which has run its sale. Possibly. Let's take a look at some Aussie pairs. Okay, let's do it. Let's do AUD USD. It is moving, but this week not so much. This was Monday. I would say from Thursday last week we haven't moved at all. just flat. What about Aussie yen? Let's take a look at that. Flat, but on a path of an uptrend. Aussie NZD was the one that I have on the watch list, but again, hasn't really moved from the 8th of April. We're pretty much at a similar level. We are flipping bullish GBP, but won't be surprised if we go back to cutting cycle again. That's something that keeps me hesitant on the pound. Pound is priced in for hikes. That's why we probably had this move higher, because we had hikes that were supposed to come in. But can the UK really afford rate hikes? Personally, I don't think so. Now, it doesn't matter what I think or believe in. It only matters what the central bankers think. If they say we're going to hike, then you need to get on the uptrend. But if they come in next week and say we're going to cut, or we're thinking of holding, economy is not doing well, price could sell off back to the initial level. That is tradable. If you can get in on a short position, selling the pound, that could be profitable. Let's do the giveaway. So let me copy all of the entries. Today is the 24th of April. So 24th of April. Okay, we have some nice entries here. Let's go to my wheel, paste, spin, and let's take a look. Francis. Yeah, Francis, so congrats on being the winner. You have won a 10K One Phase DNA Fund account. After my segment ends, I will send you an email with the code for the free account. So just a reminder, if you guys want to get funded, code A1 Live gets you 25% off any DNA funded challenge. Okay. Looking for a small pullback on Aussie NZD. Okay. I mean, it's fine. It's fine. It's bullish on the edge finder. But personally, I'm unsure. I'm a bit uncertain in Forex. I don't want to force positions. I don't want to be in a position just to be active, right? That's kind of the worst reason, or the biggest reason why people lose money is they cannot sit on their hands. They cannot be patient, so they need to force positions. And it's even worse if you're spending time on the internet where everyone is in a position at every moment of time, and there's someone online who made 10K today and he posted about it on Twitter. So if you're spending a lot of time on the internet, it's tough to control the fear of missing out. But if you're aware of it, then you already know what you need to correct. What helps, my advice, basically stay away from the internet if you can. But if you can't, try to surround yourself with veteran traders. So try to surround yourself with traders that have 5 years, 10 years, 15 years of experience in the market, and that do maybe newsletters, daily analysis, maybe they post on Twitter. And if they are sitting on their hands, you know what's up. But if they are active, you also know what's up. So you need to follow kind of what they're doing. When they're active, you need to be active. When they are patient, you need to be patient. Nick is a great example as well. If you're in the A1 Discord, you would notice Nick has been pretty patient in April, especially second half. There's a reason for that. I've been pretty patient. Alan's been pretty patient. Iwind has been pretty patient as well. Chris Pulver, patient. So yeah, that's the game. That's the game. By the way, if you want to join the A1 Discord, you can use the code Marco to get 25% off. Okay, the link to join is in the description of the stream. I had a request for euro dollar, if I'm not mistaken. So let's take a look. EU is pretty flat. Pretty flat, kind of coincides with the DXY. I think 70% of the dollar index is euro dollar. What positions could you take here? Well, if I had to give you an opinion, it would be a long, because long term I'm bearish on the dollar. The Fed is the only central bank looking to cut. Check out my central bank rate probability website. It's not my website, but it's free and I use it very regularly. So Fed is the only one that's looking to either stay flat or cut. ECB hike, Bank of Japan hike, Bank of England hike, Bank of Canada hike, RBA, of course, massive hikes. What I want to mention, Bank of England is the only one that cannot do a lot of hikes because their economy is doing pretty badly. Just let me give you that analysis, and then I'll put the stream to the next show host guest, which is going to be Tiger. So long-term analysis on the UK. If you look at the GBP, it's pretty low. If you look at inflation, CPI, GBP, elevated, but pretty much every economy is elevated at the moment because of US and Iran. Unemployment. Now this is the worst part. Unemployment is going up. There's an uptrend on the long-term data from 4.2 to 4.9. That's really not a good number. Okay, so that's concerning. Let me just check the last thing for the UK economic heat map. When did the last unemployment rate come out? Okay, April 21st. Okay, fine. So improving a little bit, but still overall not great. So that's about it from me. Thank you very much for watching. I wish you a great weekend. Take some time off. There's not a lot of activity in the markets. This could be a time to backtest, to study, to research a new edge. Be patient. And then we come back next week with all of the central bank meetings and we may get some movement. So thank you for watching. See you in the next one. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Friday. We have made it again. I was laughing earlier today because one of the commentators on one of the news sources I was watching said that the trading week feels like one long day of late. I think that's exactly right. Getting all the back and forth, the ceasefires, the what's going on, Alan? Leon, how you doing? And just everything, guys. It's just been a big mess, a lot of wait and see, a lot of neutral activity on a lot of things, guys. But one thing that I do think I like going into next week is that at least on the FX side of things, maybe we could start getting a few more opportunities. Just in looking at, and I wanted to show you guys this, just in looking at the surprise index, a lot of these currencies had been kind of hovering around that 40 to 60% range. Kiwi, of course, has been at the bottom along with the Swissy for a while, but we've recently gained some strength. I know I might have touched on this yesterday, but it's nice to see the pound, the Aussie, the yen kind of getting a little bit stronger on the economic front, on the fundamental front. So I'm hoping that this will give us a few more trading opportunities. We've all been kind of, lamenting that we've been a little bit on the neutral side the last couple of weeks or so. So maybe this might be the little bit of a spark we need to start getting some more signals. So hopefully that is kind of the case. We're already seeing that in a few things like the pound dollar. That right there has turned into my favorite major pair, just right off the bat. So that is definitely nice to see. I'm hoping we can wake up some FX items so that we don't have to stay in other assets. So, but when it comes to like the pound dollar, of course, again, that is my favorite one I'm looking at right now. Pretty nice uptrend. If I just bring my daily up over here. Okay, I got my 8 above my 200 EMA, so that's looking good. Broke structure here, broke supply zone here, and broke structure here. So looking like a pretty good little impulse leg if we look at this thing over here on the left on a 4-hour chart. And just kind of looking at this gap down we had 2 Sundays ago. From there, we just formed a really nice impulse leg that did break this supply zone. And again, those other 2 structure points I mentioned or showed on the dailies. So I personally am keeping an eye on this impulse leg. If I just kind of highlight that. Okay, we're just talking about this leg right here specifically. And again, guys, identifying an impulse leg, whether in an uptrend or a downtrend, that's one of the first things I like to do, because that just kind of psychologically tells me, okay, I know I've got an uptrend already. And obviously if that pair or whatever that asset is on EdgeFinder giving me a bullish signal or bearish, whichever, then that just tells me that I don't have to pay as much attention to all this other noise behind us. Okay, just focus on what's in front of us. I don't want to say this is not important, because it is, but this way we can kind of put our blinders on and just focus on the here and the now. So that's what I'm doing with pound dollar. And as far as my curve analysis, that's obviously my swing low and my swing high. And as you can see, I've got a nice demand zone down here in the discount zone. So just so happens we have a former resistance support line going right through the middle of that. So if I scroll all the way up, okay, you can see where we had a pretty strong bounce from this point in time back on February the 19th. So I'm looking at that. The fact that that goes right through my demand zone. This is a 4-hour demand I'm looking at. And that's currently one of my favorite looking setups. So just need a little bit of a further drop down. But you can't deny the strength of that move, of that impulse leg. Nothing but green candles starting on April 12th all the way through the 14th. So a couple straight days of just nothing but green 4-hour candles. So I really like that going into next week, because at the end of the day, I don't necessarily want to be getting into this trade today, because with the average true range, it may not have a chance of getting anywhere close to sniffing my take profit before the end of the session. And I don't want to be holding this over the weekend, especially with the prospect of the second Islamabad summit, coming up this weekend, which we do know that the Iran delegation is going. And Pakistan really wants to see this thing ended, because they've pretty much had to put Islamabad on a security shutdown with all these bigwigs coming in and out of town. So they're really harping and pushing each side. Hey, get in here. Let's get this thing over with so we can have a normal city again and not have to quarantine it, basically. So that's kind of where we're at with that. But assuming, and that'll kind of have a little bit of a bearing on even this trade right here. Okay. I mean, if we have something good come out of that, well, this is going to look like a really good opportunity. Okay. Less money going into the dollar, maybe going to some more risk assets, take the money out and redirect it. So if we get a negative meeting or we start throwing bombs again or anything of that nature, this may not look as attractive. Okay, because that would obviously give the dollar some strength. Unfortunately, the dollar, and I know I've said this before, it kind of thrives on that. Okay, it's a safe haven currency for a reason. So it really kind of depends on what we get out of this weekend as to how this specific trading opportunity might look going into the Sunday open here in the States. Monday across the pond for the rest of you. So that is my favorite one. Bitcoin is still on the list as well. Nothing really has changed on that. We had that big risk on move on Bitcoin the other day when everything else was pretty much standing still. And that's basically what happened with Bitcoin yesterday. It just kind of ranged in this 78.5 to basically 77.5 level. Okay, so about $1,000 range for that couple days right there. But nothing really has changed. I mean, I still have an alert set here at the 76.430 level. That's a 1 hour zone. But again, that's a little higher up than I like. I had drawn up this curve analysis from this swing low, but I think realistically I'm going to stick with down here because, again, and I kind of go back to what I might have showed you guys yesterday. Every pullback got bigger and bigger on this thing. So I'm to expect that same size of pullback that I would have to reasonably expect. It could come all the way down and chew through that first zone and attack this 1 hour zone at the bottom. So that nothing's changed. Still keeping an eye on this 1 hour demand zone where we did also have a former support resistance line, blue dash line come through that. So that remains the same, although I do think Bitcoin got just a little weaker. So it's still a +5. It's still a bullish list, a bullish item, but it's down from the +7 I think it was at yesterday. So that's a look at really a couple of my favorite ones at the moment. Aussie Kiwi, Aussie Swiss. These things are still a little too close to overhead supply zones, in my opinion. We could definitely take a look at those real quick. Let's see, Aussie Kiwi. Yeah, here we go, guys. So here's Aussie Kiwi. So daily, everything looks nice on the daily. Trending up, breaking structure. But the problem is, again, we've bounced into this daily supply, which dates all the way back. And that's that one from April of a long time ago. So I don't want to necessarily go all the way back. But again, it's just butting into that. It's probably a little easier to see over here. Let's do this. Zoom in over here, 4 hour chart. There you go. So we've already bounced into it once, got a rejection, bounced into it twice, got a rejection, and now we're in a third time. So I'm just going to go ahead and ignore anything up in this area, and I'm sticking with my guns, okay? This daily 4 hour confluence that we have all the way at the bottom. This remains my favorite look on Aussie Kiwi. Made even better if we somehow were able to chew through the rest of that overhead supply first. But at this point, I think that's probably a decent enough pullback. You know, if we were to get a pullback straight from here, and they'll look to take a possible trade at that point there. 4 hour zone. But to be a little on the conservative side, you know, one could obviously put the stop loss below the daily as opposed to the 4 hour. So that's just a matter of risk tolerance and what you guys have. But the benefit of underneath the daily is the fact that we've actually got yet another smaller zone over here. And I think that was a 1 hour. So let me go double check that. Okay. Now this one is a little lower. This could definitely be it's a 2 hour. So this could be a little bit of a, let me refresh this real quick. Yeah, here we go. Talking about this zone over here. Okay, so that right there looks like a pretty strong zone. Pretty good gap, gap up, pretty good continuation move. So that's kind of a last resort zone, I would say. If everything were to fail on this daily 4 hour confluence. So you know, you could even take that into effect. I mean, that's going to drop your reward risk a lot, but it would obviously keep you in the trade more so, just in case we do decide to test all this down here. So that's kind of a look at Aussie Kiwi. I'm just a little hesitant because, again, it has not yet chewed through the rest of this overhead supply. So again, if you're somebody that thinks this is old news and it doesn't matter anymore and they expire, they have a death certificate on them, then there you go. You don't have to worry about it. But I personally, just in all my years of looking back and history, I've seen quite strong rejections from these old ones. So, did I lose you guys? Let me refresh my screen over here. Oh, okay. My other computer went down, so let me just refresh that so I can see my chat. And okay, there we go. All right, we're back up and running. So guys, let me know if you have any tickers or anything you'd like to look at. Devil Rust, dollar, yen, most important. Yeah, let's take a look at that. Because a lot of people have kind of gotten sidetracked and forgotten that we still have intervention to consider. And as far as, I do believe that one fell off the list. Yeah, so we're back to neutral on that. But let's take a look at the technicals for this real quick. 4 hour on the left. Excuse me. I feel like a pin cushion today, guys. I went and did a men's appointment yesterday, some blood work. And normally my veins stick out like Alaskan oil pipes, but it was a cold office and they had my arm propped up. So I think all my blood rushed to my feet. So they had to stab me on my arm here, my wrist here, my wrist over here. And then before that, they started clenching on my others. So they almost stuck me 4 times, but they finally stuck me 3 times. and they finally got enough blood. So it was a lot of fun. But anyway. Let's see. So yeah, dollar yen, just to help you out with that. So we're currently bouncing into that 4 hour supply, getting a little bit of reaction there. Yeah, and then just kind of taking a step back, this thing overall has been sideways the last few weeks, but keeping in mind, we bounced into that overhead supply. So let me do this just so I can make it a little easier to see. Just going to go to a 1 chart look. Yeah. So this was that weekly supply, you guys, that I pointed out, I think earlier in the week, which is basically what we're bouncing into now. Now I'm not as worried about the weekly as I am the daily, which is a little higher up. You know, we talk about intervention and when this thing might have a big ugly drop. I'm still remaining steady on that 161.25 level, because that's really where the daily intersects the weekly as far as supply. Just taking a look over here on a daily, we can go, take another quick peek at that. Okay, talk about this daily candle inside of the weekly. That's really the main focus I've got on this thing. If I were to be trying to take advantage of a big intervention on this thing, I kind of think that maybe the Bank of Japan has already been doing this to begin with. I really do, because, the dollar, if we look at the index, the currency indices, the dollar clearly was the winner. Okay, the other 7 majors had a decline. But dollar yen during the course of this war has stayed in this range. Okay, we haven't seen any big uptrend like we had seen in some of these other major pairs. So is this the Bank of Japan just slowly accumulating yen, accumulate, and that's why it's not going up? Possibly. I don't know. That's just kind of the way I looked at it, because why is it not going up when everything else was? So just something to think about. They could be just doing one gigantic distribution or accumulation of yen, if you wanted to look at it that way. So that was kind of my thinking, because otherwise, again, why would it not be going up? And again, a lot of it too is you got other intervention traders out there trying to short this asset, buy yen, sell dollars. So yeah, grand scheme of things, between the intervention, the war, some of the dollar fundamental reports going downwards lately. Remember, it was the strongest currency. Now it's down to a 45%. Okay, if we take a look over here. So it's just been an interesting spot for dollar yen. Why is NVIDIA pumping? I don't know. Go look at the chart of it. NVDA. Yeah, I know this. We don't really do a whole lot of stocks over here. I don't even know if I have that one on my list. NVDA. Take a quick peek at it. Oh, it's going up. Okay. It's a pumping. I don't know. What kind of a news we got down here? 30 billion from China's infrastructure. Yeah, I got to be honest with you, ladies and gentlemen. I don't get too deep into all the number side of things when it comes to stocks. I play in FX land mostly. But just looking at the technicals over here, NVIDIA. Yeah, clear uptrend, 4-hour chart. And I don't really see much in anything as far as demand goes. Yeah, I don't know. Good question on that. But we are getting close to an overhead resistance for sure. 212.18. So perhaps we'll see a brick wall. Let's look at the zone on this. Okay. So just real quick on this, and then I'll get back to FX land. But we do have a little bit of a daily supply that we're just about to slam into. If we have, okay, we already have. So there you go. So it's currently bouncing into a little bit of a daily supply. And then, of course, you got your high point up here, which is where I would just put in my blue dash line there, just see what happens. If we can bust through that, then I would say that's a breakout. But I wouldn't. I'd be afraid to call that a breakout yet. Not until it passes through the technical level there. So, yeah, good stuff. Good stuff. Good stuff. All right, getting back over to FX land, guys. And we'll take a look at a couple more of these. What else did I have over here? Israel, Lebanon, 3 more weeks of extension on their ceasefire. So, yeah, a little bit, just a tiny risk on move for the day so far. Let me go back to my 30,000-foot view assets over here. Okay, we got our volatility index pretty much to decline again. So this thing had a big spike up when the week opened, and then we just went sideways on this. So it looks like a little bit lower or higher highs, a little bit lower lows. So it's a little bit of that fanning out action, the Discord joint indicator or the megaphone pattern, guys. I put that on a shorts. If you want to check out my shorts, go over here sometime to FX Empire Network. I've started playing around with the thumbnails a little bit. But disclaimer, watch all of Nick's stuff first, guys. He is super in-depth on everything. But if you're up late at night, it is a weekend, and you just want to mess around, but you don't really want to get too serious, go watch some of my shorts. I think you might like them. They're just little nuggets of, tidbits of information to help on technicals and some of the fundamental side of stuff. So thought I would share that with you guys. But again, Nick first, me second. Okay. Is that fair? Mine's just more so for the entertainment value. Let's see here. What else we got? Dixie. Okay. Having a look at the Dixie again. We did have that push up through the course of the week, getting a retracement now. But this is all keeping in mind, guys, that we had bounced into that daily 4-hour demand. I know I've mentioned that a few times lately, but yeah, I still wanted to, I still want to keep an eye on that, because at the end of the day, that was quite the strong zone of demand that we got to bounce from. Okay. And again, I use the index just so you guys know, when it comes to the Dixie or the AXI or the SEXI or the JEXI, any of the other currency indices, whenever I'm looking at a supplier or demand zone on whatever currency pair, I want to go look at the index for those other 2 currencies just to see if they're in any major support resistance area or supply and demand zones. Because if they are, that's an extra odds enhancer for that currency pair. Okay. If I'm buying dollar yen, okay, it's nice to know that I'm getting a reaction off of a daily 4-hour demand to the upside. Okay. If that would mean I'd be selling the yen. So if I'm selling the yen, I'd want to go to the JEXI, the JXY, to make sure I've bounced into or fixing to bounce into a overhead supply zone on that daily 4-hour. So again, it's just a little bit of confluence, a little extra confluence that I personally like to use. I don't know if any of you guys have done that or not, with support resistance or anything. But try that out sometime. You'll see that that's just an extra little bit of odds enhancer. It's extra, a little bit extra bit of confidence in that trade opportunity for you. Let's see here. What else have I got? Oil. Take a look at oil real quick. So we did bounce through this minor supply I was talking about. Again, this is going to hinge on what we get this weekend. If we get bad news out of Islamabad, and this is pretty well neutral, I think, at the moment, talking about WTI. But if we get any negativity, guys, then this minor downtrend, you could say, is probably going to flip back to the other side. And I've kind of drawn this green projection lineup, assuming things go bad. Okay. Assume the worst, hope for the best. So if things go south, there you go. Now, it was a little bit of nice news getting that 3-week extension on Israel, Lebanon. Okay. Keeping it kind of subdued somewhat, but the reality is we did bounce through this minor supply. So the next step is really looking at this supply over here, which it wouldn't look exactly like that. I'd have to get down in depth with it a little bit more, but that's one thing I'm looking at. If we can break this structure like this on some negative news out of Islamabad this week, then, technically I'd just be looking for a retracement back to demand. Because to me, this would kind of turn into the new impulse leg, right? Actually, I would probably pull that down a little bit more. Well, I guess I would. I'll tell you what. I would make that look a little different. I would probably start it down here, but if you wanted to look at it from the resistance turning into support as far as the zone itself, then yeah, that's why I drew it up like that. But either way, yeah, break some structures, get some retracements from a technical level. That could be a little bit of a trend reversal, but we still have to have edge finder confirmation. We just don't have that. Taking a look at my neutrals over here, just see what oil looks like for you guys real quick. Dollar Swiss, yeah, Akosi Badong, yeah, and pound Aussie, yeah. Let me get to that. Yeah, euro oil. There we go. U.S. dollar oil or U.S. oil, guys. So technicals, it's already so the moving average that Nick has within the parameters as far as saying if that trend is up or down, it's already flipped bullish. Okay, I just look at it a little different. I look at some breaks and structures, a couple other things, but there you go. We're just not getting any help on the sentiment side of things right now. Now we do get the COT report later today after the market closes. So as always, guys, that thing's accurate as of Tuesday, so 3 days old. But again, big banks and institutions, they're not always trading on an intraday style like a lot of us are. They're in it for the long haul, weeks, months, sometimes years. So it's a good opportunity to see where they're positioned, see if we can ride their coattails and see if everything matches our fundamentals and our technicals. So that's why sentiment score is so important. But we just don't have that at the moment for oil. It's neither bad nor good. Now let's get to your questions over here. You had dollar Swiss, which I do know is neutral. I've got a few minutes left here. Dollar Swiss. Did that one pop on the list? I don't think it did, right? Yeah. So dollar Swiss neutral. Just take a quick look over here. Dollar Swiss neutral 4. Okay. So really we just need the technicals to flip around, and then this thing's going to go to the bullish bias on the top setups. That's the only thing keeping us down. So let's go look at the technicals on dollar Swiss and see what it's going to take to get this thing bullish. Okay. And I'm just going to, let's do this. Yeah. Okay. 4 hour on the left. Yeah. So that's it, guys. At minimum, well, so I would stick with the edge finder. I almost would say because we've kind of bounced into a daily already and we're getting this reaction, this might have been the catalyst to kind of help push us back up. But I think the safer thing to do, quite honestly, since we're looking over here on the daily on the right, probably the safer thing to do is wait till we at least break this structure point here and then look for a retracement at that point, right? Because that way, then we'll over here on the 4 hour, we're talking this. So if we could break this structure, and I'll just and I guess that does kind of create a little bit of a supply zone. So let's just draw that up real quick. Okay. Oh, come on. It's basically going to be that. Oh my goodness, I can't get it to stop. There we go. It's basically going to be that candle. Okay. If we're taking a look at this candle right here. Now, I would still just force it to break that structure. Okay. If we can break that structure point and that supply zone, which it would have to do, then this thing, that'll probably flip bullish a little better because the moving averages that he uses in his algorithm will flip over, and then we'll be looking good. And then it's just nothing more than waiting for a pullback. Who knows where the demand zone would be in this point? You guys know me. I like curve analysis, so I'd be looking to swing low down here, swing high. It might take a little bit of a deeper retracement. And this could be too far, but the best zone I see just off the top of my head, as far as closest to the origin of the overall strong move, get that out of the way, is really going to be all the way down here. So that right there could potentially come into play in the future. Again, we're shooting pool here. We're playing 9-ball, 8-ball, snooker, whatever pool game you like, or billiards. Okay. If I'm looking ahead a bunch of balls, okay, to make my play or get my shapes right, my analysis, I want to break structure. And I would personally like a retracement, as silly as this sounds, all the way down there. That would be the cheapest route. That would be the most conservative route. That would be the highest probability route. But depending on how strong that currency pair gets on the edge finder, assuming we do turn bullish as far as the trend goes on that number, then it may not even give us a chance. It may retrace a little and just take off, which that point is where you could start doing kind of like what Nick does. He looks at the 38.2 fib on some of these things, the 50% fib. There's obviously the 61. I'm just a little pickier, and I just go for the bottom third, the discount zone of a curve analysis. That's just the way I do it. I'm not saying I'm right or wrong, or nobody's right or wrong. It's just, you practice up and you do something over and over. And at some point, even if it doesn't jive with what everybody else does, if you figure out an edge, go for it. Right. So that's about the best I would, this is what I would want to see. At least that 38.2. Because if I get a strong enough demand zone, I'm not going to ignore it. Okay, I might just be a little more careful on the risk, maybe drop it just a little bit, just because it's still, in my opinion, high on the curve. but I take trades at 38 too. I take trades at 50%. Okay. It's all I'm saying, especially for beginners, is oftentimes it's just easier, it's higher probability to wait on these bigger discounts, but a lot of times you don't get them, guys. And that's why I only get into about one to two trades a week, because I'm waiting for something that doesn't happen as often. That's my risk tolerance. If I were a little more aggressive, yeah, I'd be going for the 38 to the 50, but that's just kind of the way I was brought up in it, and that's what's comfortable for me. So anyway, that's dollar Swiss, and I think we're about out of time, but pound Aussie. Yeah, we'll take a quick look at pound Aussie for you. I do believe that one. We'll get that pulled up over here. Pound Aussie. Yeah, I think that one's not quite on our list yet, but let's take a quick look at the technicals. So pound is the strongest currency. Keep this in mind. And the Aussie is the second strongest. So this is what I personally don't like to see. I don't want to trade two very strong currencies or two very weak currencies or two middle of the road currencies. I want to trade something like a pound, or I'll say yen, and compare that to a Swiss, a Kiwi or a Swiss. That's what I personally like to see. And that's why I haven't placed a whole lot of trades, because again, all of them, they've all been hanging out in 40 to 60% range pretty much, and just kind of going sideways. But we'll take a quick look at it anyway, and then we'll wrap up, get up out of here for the day. Pound Aussie. Okay, so my 8 is below my 21 on the trend. So this is a mechanical down push here. Okay. Dailies, we go to the 4 on the left. It's going to obviously give us a series of lower lows and lower highs. Yeah, I wouldn't want to sell the pound with it exceeding expectations on all of, except for 2 of its reports, because on 2 of them, they were a neutral. Okay, they met expectations, so it just kind of cancels itself out. But of the ones that either beat or exceeded expectations, every single one of the British pound exceeded expectations. So I personally have no interest in trying to short this, even if we do get a retracement up into a zone, something like this, just because of that. I don't want to sell strength. I want to buy strength. But if we're just looking at the technicals and supply, okay, that would obviously kind of be it. But then you got to worry about the fact that this is one big giant cluster, you know what. Okay. So I think there's going to be better assets out there for us to trade than a pound Aussie, but that's at least a little bit of a technical look for you, despite the fact that both currencies are quite strong right now fundamentally. So just keep that in mind. Ladies and gents, I'm up against the clock. I got to get up out of here. Have a wonderful day today. Start looking out, start plotting and planning some zones and some spots for you guys to start digging into some FX trades next week. I think we might have some better opportunities, way better than this last couple of weeks, because again, the Aussie, the yen, and the pound have gotten some strength. Peace out, everybody. We'll talk to you next week.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.